All right, hopefully this is going to work. Greetings, everybody. This is Jeff Scott. Welcome to this week's review. Boy, that was a tough week in the market. Um, I took heat. I suspect you took heat. Still alive. Hopefully, you're still alive. Um, as you'll hear, there's more important things sometimes in the market a bit as well. It is kind of interesting watching the coronavirus story play out in the news. The doctor on TV really raving this morning about how the press has overblown this. Um, I think there's some light at the end of the tunnel, at least for China. Maybe we'll talk about that as we go. I titled today, Can a Rally Resuscitate the Bull? I think there's some argument to be made that maybe we're already stuck in the market. Today is March 1st. My email is hgsi@gmail.com. As always, it's for education purposes only. Any recommendations for education, not investment advice. I'm a doctor, not a broker. I'm independent. I'm not financially affiliated with any software vendor or trading company. That means I don't get paid anything by anybody. So, my day job is a medical guy. The tools demonstrated those that I use in my daily trading, and I pay for the tools. Trading involves risk. You and your are responsible for any investment you make. I'm going to spend a few seconds here talking about the guy in the lower left-hand corner. Um, George and I have been friends for a long time. George Lee, and I don't want to be a rumor monger because I haven't been able to confirm it. I've tried reaching out to his wife. I knew George was very sick, and I heard that George passed away this weekend. It just breaks my heart. I know many of you out there feel the same way. George, I believe, was about 72 or 73. He had been diagnosed with cancer a couple of years back. Um, He's a fighter. He gained his weight back. He was telling me how great he was doing up until recently. But what really, he was a genuinely good guy, nice guy, great trader, great educator. I learned a lot from him. I made money from him. I know there's countless others that made money from him. And I remember my first exposure to him, of all places, was being a speaker for Best Choice. Um, I would wish it's not true that he passed. I've texted and emailed a bunch of people. We all seem to have heard it from the same source. Based upon what I knew, God bless you, George, and we'll see you someday, I'm sure, in a better place. Um, on that note, obviously on this presentation today, let's move ahead. For those that do not know who highgrowstock.com is, it is not my company. I think I want to own a software company. Actually, I already do in the medical world, and that's enough. But if you go to the free 30-day trial, you can download the program without even needing a credit card and spend some time in the investment strategies section where there's a lot of movies. I sent George some new movies that I did for some of the background, and we'll see if those get posted soon as well. Stock patterns are cyclical. I can't tell you how many times I've thought we were rolling over and starting stage 4 fear bear market. We're clearly not in a stage 2 market. The issue is whether or not we're going to bounce back up into the stage 3 uncertainty and have another leg up. At one point, that's not going to happen. Maybe we've already had our pullback, but we've had a pretty significant pullback. Damage needs to be prepared, and I, for one, am not expecting a V-shaped recovery. Now, if you didn't believe me before that high growth stocks, they may go up like rockets, but they fall like rocks. You probably believe me now. Therefore, I have started selling bear call spreads, buying puts, selling calls, shorting stock, and buying contra ETFs. Now, let's be transparent. I have longer term holdings and I have a trading account. I let my longer term holdings run through a little bit more risk, although I've started buying protection on my bigger holdings like Amazon. I should have acted faster on my shorter term holdings. I started to act as the week went on, but I entered the week with TQQQ, the 3Qs shorts. That one really did well. SDS longs, that did well. SQQQ loans, that did well. FAS loans, that did well. Um, DXX loans, that did well. Puts on Amazon, Apple, that did well. Puts on Bank of America, probably a push right now. That said, I don't buy puts that are more expensive than the stock because those puts would be very expensive insurance. It's kind of like a deductible. I'm willing to risk 5 to 10% before I'm covered so that my deductible is high and my insurance is cheaper. So I took some heat because of that. I'm pretty well situated right now, although the rally on Friday would lighten a little bit of my protection. Speaking of Friday, notice what's not green. Utilities are not green, real estate are not green, and staples are not green. We saw a rebound in some of the more risky type things like energy, which has been getting clobbered. Consumer discretionary improved, communications, technology improved. Now, when they wonder what happened, will go up from here. You have to be open to every possibility. Have we entered a bear market? I'm not saying we did. I'm saying you have to be open. If we look at the market, now I'm not even sure you can go look at this. It's pretty clear to my eyes that we got pretty ugly bars on Friday with sell signals popping up, John Person sell signals on the E-mini futures, the NASDAQ futures, the Dow futures, and the Russell futures. We'll talk about how much they're down eventually, but figure 12 to 14% from their highs. And their highs, as you can see, the little white balloons on the top three were within the last day or two. So this was a huge sell-off from highs. Now, if you want to be a bull, you could say that, well, gee, the E-minis traded back up to their 50-day moving average. Look at that bottoming tail. Bounced off the 50 on the NASDAQ, whatever, improved a lot on the Dow, stopped at the 200 on the Russell. So there's some bullish support arguments there. I need to see more. You could look at the VIX and say the VIX has come down some. And remember what my good friend, may rest in peace, George Lee used to say from the podium. When the VIX is low, look out below. When the VIX is high, it's time to buy. When the VIX is high, I always say wait for it to start falling before you start buying, wait for it to start rising before you sell. And then the dollar is just really sideways, but last day was a down day. I look at that. Do I feel the need to go out and go crazy on the long side? Maybe I should. I'm still very concerned about where this market is going. So there are the, come on, we'll switch the view. If I look at the weeklies, whoops, that was the weeklies. You know, the weeklies just show you how far we went before we got to a week where the market rolled over. Is that the weekly? Yeah, that was the weekly we were looking at. On the dailies, you could see, let me go back. Apologize for that. But frankly, there's a reason why I was on the weeklies. I think the weeklies are darn important, and especially on my longer term holdings. So that's the weekly. Now let's go back and look at the daily. The daily makes Friday look good, but it's all because of that bottoming tail. Now, again, if I want to be bullish, I could talk about how we closed up on the day. We had big bottoming tails. Is this what John, what we call it? They put it in the road, a jackhammer candle. I don't think so. Um, but if you want to be bullish, that's your story. And obviously, the VIX peaked and came down quite a bit. So not sure that adds anything. I still like the weekly because it gives me a much better sense of where this market has been and perhaps where it's going. I had a funny error message pop up on the computer, and I decided not to reset. So, um, if there's weird things that are happening, probably because I need to do a restart, but that will take time to do it. Now, what's underneath? You know that these slides are the same slides I look at every time. I update the data because the data gives me clues that help me in this market. Rates fall to historic lows. The Feds, I think, across the world may be getting ready for a coordinated attack on the rates. We'll see. But look at where the 10-year and the 30 years have fallen. I These lines, let me just explain them. Over the last 15 years, I've watched interest rates, I've watched where the S&P was, and they've kind of been lines in the sand. If the rates get below a certain point, these are the lower lines everywhere, um, then that tells the market participants that the economy is really bad. If the rates are above the top bar, that's telling me the rates are getting high and they could start to impact on the growth of the economy. We have a sweet spot. We have a sweet spot. When you break down like this from the sweet spot, there are some economic concerns. The interesting thing is all the rates came down this week. It's hard to see, but the 2-10 spread people talk about often in regards to the inversion and risk of the Fed, risk of a recession, actually was steady on the week. AD lines, whether you're talking small stocks, the index of the stocks is in red, its AD line is in white, or large stocks rolled over. There's no divergences there. Just shows you how big of a drop you saw. Muddled chart. All I want to point out here's the NYSE. Maybe I should be concerned more. A lower high was put in on the AD line here. And the only thing that's running up here is blue, which is the TLT, which are bonds. Breadth is getting to a point where it's getting interesting. Stocks above the 200-day drop down to here. Now, if you look over the last 10, 15 years, it does get lower, but we often see reversals from a higher level, and this you really don't want to get to is the financial crisis. Stocks above the 40, the story is the same. If I look at the 3-month new high, new low indicator, the T2121 or 12-week new high, new low on TC2000, we are at the same level where we saw reversals in 2008, 9, 13, 14, December of 18. There's a lot of reason to think that we're at a level where we should reverse here. Again, fueling a rally on Monday, Tuesday, but I'm not saying that that reverses the bear. Don't know that. The McClellan certainly um, shows you on the daily and the weekly the divergences that preceded this market roll off. Now, if you look at the daily oscillator, we are down below an area where we reversed multiple times in the past. So this might be more argument about it's time for a reversal. Here you see it on the weekly. So maybe we've got a bounce coming. I think we do. That's why I lightened up a little bit in the close on Friday. But that doesn't mean we're going to get one. The news flow still is going to determine it. Um, but maybe some things in the news will be positive this weekend. Current buckets. Boy, is they ugly. Let me just explain what this chart depicts. Imagine if you could take all the stocks in the S&P 1500. I am taking stocks from that I put the list together last month. So it's an up-to-date list. And you looked at every one of those charts and you had a Bollinger Band on each chart. And the midline of the Bollinger Band is sort of a dividing zone above or below which side of the Bollinger Bands are you. Then you could set the bottom of the Bollinger Band at 0, the top at 100, divide it into 10, you've got 10 deciles, 10 slices of the Bollinger Band. So slice here and 1 would be those stocks that are between 90th and 100% of the width of the height of the Bollinger Band. Greater than 1 would be stocks that are above the Bollinger Band. and less than zero will be stocks that are below. And this number will vacillate. When I look at stocks above or below the midline, typically it's a 50-50 in a neutral market. It doesn't often get to 97%. These are on the left is Friday and the right is Thursday. These are 2 days in a row where we have 97% of stocks below their midline. If we get student value left, usually that's mean. And if we look at stocks below their Bollinger Bands, we're at pretty impressive numbers. 70 plus on Thursday, still over 60% of stocks are below their Bollinger Band. If stocks are below their Bollinger Band less than 5% of the time, the market's below their Bollinger Band. Either the world is about to blow up or we're going to get a reversion to the mean. Now, before I get overly excited, I take you back to a time when I was still doing these things in 2008. This is about the time that the market bottomed. If you look at 10, 3, 6, 7, 8, 9, and 10, you look at a series of readings. And the point I want to make with these readings is you had a 70 on the 7th, 50 on an 8th. You went backwards to a 70 on the 9th before the market started to improve. So we can get more oversold. Just because we're oversold does not mean we can't get worse. I would also point out that there is no bias in these numbers. One of the problems was if I use today's S&P 1500 and look back on this date, the constituents would be different and some of the weaker sisters would have dropped off and that could have given bias to the results. I am using from a file that was from March. So that's not. Now I have to figure out what that actually even means. Ah, this is a file that was based at the time of this market, probably at the end of the year, early May, early. This was March of 2009, and I went back and I looked. So not much bias there at all. So a little bit that we learned from Ian, and I had a good laugh as this showed up not only on the HGSI bulletin board or whatever you call these things today, um, but it also showed up on the Palatuma IBD board. Ian lives on years since he's been gone. Let's just say we're down 12.9%. We are at a point now, once you drop below 12%, we might be done, but you really don't know where we're going to go. He taught us don't tolerate more than a 10% correction before you act. I build that in with my insurance premiums. Deep corrections will kill you. There have been 17 greater than 20% since 1957. On average, that means we should get one every 3 years. We had one in October, November, December 18. It's potentially time again. I don't know where this one stops, but when we didn't turn back from an 8% drop, it told you we're going to get worse, which is sort of a self-fulfilling prophecy. The NASDAQ's a little different. There's an equal chance from 12 to 38% correction when it drops below below 8%. Well, we're below 8%, and deep corrections will kill you. Be careful. Now, I had to go back into old slides, and I know I redid these slides, but these are the ones I found. I used to subscribe to this thing from investtech.com. It's up in Montana or something. It's a monthly newsletter with updates frequently. Very, very smart guy led this, and he's one of the 2 or 3 people that have called every bear market in the last 30, 40 years. And he put up some bear market stats that I thought were impressive. First one is the median bear market is 16 months. We've had 1.5 weeks of a bad market. We had new highs a week ago. Right? So if we're feeling emotionally bad about this market, and we're in a bear, you need some Prozac because we may have a long ways to go. The average bear market decline from the top is 33.5%. Now, we're down 12.9 to 14%, 12 to 14%. Again, if this is a bear market, we have a long ways to go. Now, I haven't subscribed to this in a decade. Um, well, I haven't subscribed for 3 or 4 years, but the last time everything was checked was a decade ago. So I think about how will you recognize a bear when you see it? Was there extreme optimism in this market? Absolutely, yes. Everywhere I went, people wanted to talk to me about making money in the market. Well, I teach with the admins and everybody else is asking me how I can help them make money in the markets. And you know that there's optimism. Is there an unfavorable money climate? I put no, but maybe it's yes because the Feds have limited more that they can help us because the rates are already free money. So I left it as a no. Is there increased recession risk? Please go coronavirus. Yes. Is there falling consumer confidence? Coronavirus. Yes. Weakness in bellwethers. Have you seen your Apple and your Microsoft lately? Yes. Narrowing participation. Breath took a major hit this week. Yes. And you've got the divergence on the McClellan. And confirmed bear market leadership. Now, I don't even know what that means because uh, they never diverged that. But I'm guessing it's a yes. Utilities, staples, they keep talking about Clorox, CNBC, Procter and Gamble. So I look at this and realize that we have a lot of warning flags that we've either entered a bear or we're at risk of a bear. Now, speaking of warning flags, we did have a Hindi on the 24th on the NYSE. We were already at a point where the market was weakening. Once again, a series of Hindis have triggered us to be prepared for a market correction. Now, what this means is if you can see this, and it's hard, 25% of the stocks in the NYSE had a new low at the end of the day on Friday. It's like about 16 to 18% on the NASDAQ. This market is way oversold, but it might get more oversold. Market tone. Oh my God, a sea of red. You can see that you had major shots across the bow on the 24th, where you had kahunas to the downside across the board. And that was, then you had 5 days in the market um, demonstrating the weakness. Tuesday, you had more kahunas. The yellow and brown here, I never knew what that really meant, but when you see that, it just shows you the volatility. And then with the brown, the extreme volatility in the market as the bandwidth is increasing. Notice in a bull market, in a good bull market, the bandwidth is 0.6, 0.7, and we're looking at 0.14, 0.16. Very volatile. If you look at the sectors, same thing on volatility, all red. All the sectors were down on the week. Canaries in the coal mine. Yes, you don't have this view. I put it together yesterday in a session teaching people how to make charts. Again, that'll probably be posted at some point. But the Canaries, they had a key reversal on Friday after a hard sell-off. It's just like the market. Are they done? Only time can tell, but now you've got resistance at the 50. You got a gap, small gap to fill. You got resistance at the 17. You got a lot of resistance to get over. Your person buy sell signal is in a sell. Your weekly bongo is in a sell. Um, I don't think this is something we get over and fix in one day. Looking at the larger index of leaders from January 19th, which held up about a month and a half, it finally broke this week as well. And it too had a significant bounce on Friday. And will that 50-day turn into resistance? We'll talk about that more. Know your news and earnings, not as if we don't have enough to worry about already. We have non-farm payrolls and unemployment rates coming out on Friday. We have jobless claims as a Preceding that on Thursday, a beige book from the Fed. On Wednesday, we got some PMI numbers, ADP employment, ISMs. Anytime you have a monthly unemployment report, it's high risk on the news. Um, there's been some scuttlebutt, some concern, some thoughts that we might see an intervention by the Feds on a concerted basis around the world. Um, I don't know how much we can get help from Europe. I mean, there already are negative rates. China's already put a lot of liquidity in, kept their market even worse. It'll be interesting to see. And I hope that the positive sentiment that I'm expressing about the next couple of days and that I'm feeling from my market reviews is not just based upon everybody thinking the Fed's going to cut, because if the Fed doesn't cut, you know what is the market, instead of getting a relief rally, it's a bit of a that's interesting. I just saw Jesse Stein put out a new PDF called Markets in Turmoil. That'll be an interesting read. Certainly is an interesting guy. I actually learned about him from my buddy George Lee. If we look at most anticipated earnings releases, you still got some, I'm just going to call it ones that have been hitting on the news a lot. JD.com, I hear that every once in a while. Tilray, really a gold stock, was a big flying years ago. Now it's not worthless, but worth a lot less. Stone Company shows up on a lot of lists. Um, Target, AutoZone, Kohl's. These are big retailer names. Ross, Nordstrom, um, Ambarella, a one to high flying technology. Viva technology that supports clinical trials. Got some semiconductors. Got Maxar there. There's some Dollar Tree, Zoom, Splunk, Guidewire. There's some big stocks this week. Kroger, one of Buffett's biggest holdings. Plug Power, Costco. Um, big name this week. So this is a big news week, big earnings week, and big risk week based upon what we see from intervention from Fed and others. I think this market could have a substantial move, and it could probably have a substantial move in either direction. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. So, what are my thoughts? We've had the worst week since the financial crisis as the novel coronavirus raises concerns about Q1 and Q2 economic results. In addition, political concerns regarding rising popularity of socialist candidates and perceived anemic response to infection by Trump fan the flames of volatility. Markets give up gains for the year and then some. Look at that. The Nasdaq's now down 10.5, the S&P 11.5, the Russell 12.7 on the year, and the Dow is down 12.4. My portfolio took a hit as well, but remains positive on the year. I blunted losses by multiple preemptive moves, puts on largest holding, calls on contra ETFs, shorting high cost bullish ETFs, and net result is my losses were diminished but not eliminated. Again, each of these, like my disability insurance that I no longer bother with because I got enough savings and I'm an older man, just like my life insurance, my car insurance, my wife's jewelry insurance, my boat's insurance. I don't ever want to use that insurance. So I buy it to eliminate and prevent a big loss that could affect my day to day quality of life. I do the same thing on my investments, which means rather than pay a lot of money for an at the money put on Amazon, I'll buy a put that's going to give up 50 or 75 points because the premium is much lower and hopefully I'll never use my insurance. My puts were a little bit below market, so that causes me a little bit of heat. But tell me if you wouldn't want to have 2,100 puts on all your Amazon shares today. Similarly with Apple, Bank of America, um, little heat on those. But I also sold calls when I bought the puts. So those calls go up in value, or they go to zero. My value goes up. And I've stopped selling puts close to the put that I buy because then I limit my benefit. Shorter surprise to expected overall bounce on Monday. The markets have suffered significant technical damage. I do not expect a V-shaped bottom. I will use this bounce to lighten remaining longs, sell out of the money spreads, It would not surprise me to see a coordinated Fed move in the U.S. and world before the market opens on Monday. All right, let me take a second to shut this down and go see what my dog wants. I'll be right back. All right, back. I'm not my usual bullish self today. You noticing that? Maybe that's a good sign. Go down here and look. I'm going to pull up something for posterity's sake. I subscribe to a lot of programs. Um, this is e-signal, and sometimes it's good to really broaden your perspective and look at the market from a longer period of time. So let's do that. Give me a sec, because I have too many programs to remember how to do things. I could, da, 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 no. Look at the run we've seen in the NASDAQ from 1990, when the NASDAQ was in the 2200 range, to 30 years later. That was 99, so 20 years later to 97.58. That's a fourfold increase. Using this program in eSignal, blue paints periods of bullishness when you need to be long the market. Green is indecision. Red is bearish. When I look out far enough, you can see how crazy extended this market has become. Back in 15-16, there was an interesting discussion about whether this was going to be a double top going back to the 1999 high, and and I'm going to show you the E-minis in a second, and was the market going to top there? And turned out it really was when you broke that double top, you kind of got a one-to-one here. So if that's a one-to-one, we're probably getting close to that. And we are an extended market, but the other message here is on this weekly chart, this monthly chart, we have not rolled over. We did turn green, clearly caution. You can get significant pullbacks, but when you stand back and look, this was a painful. I mean, we're double topping here. Put the E-mini up. Again, imagine you were sitting in the market right around this time, 2013-14. It certainly looked like we were at risk of what would have been a triple top, and we blew right through it. Look how far we've come with no red monthly bars. Not to say we haven't had pullbacks and daily monthly bars, but we've had a long period in this market without a significant pullback. Does that mean it's different now, and are we about to get that pullback? I'm not saying that. I'm saying that I'm keeping an open mind, but we've gone a long way without a serious bear market. And it's, bear markets happen, and sometimes they come when you least expect them. We'll see where we're going here. Market force and divergence, just to give you an idea. Look at that sell-off on the daily and the weekly, and frankly, even the monthly of the E-minis. I draw a line here. Let's draw it right there. Let me get. We can go back to October of 2019, where we touched that line. We can continue to go back where at one point this line, stop, represented prior resistance. All right. Resistance turns into support. When we were nailing around this line, right, way back in October, November of 2018, before the market took a dump. I just think that's interesting where that's the line that this pulled to. Now, that may be very important, and that might say that this is the natural place where prior resistance has turned into support and we make our stand here. I think that line's important if we break through. Um, but what a pullback. Epic proportions, short period of time. And guess what? Our high jump bar is now down to 0.53. No reason to belabor the points. If I look at the Russell, I look at the Dow, I look at the NASDAQ, you see the same thing over and over again. Wow, that's all I can say. WOW. Let's go into Hgsi. So I've got should have my major markets and analysis groups provided by Ron Brown, Major Markets Plus, Warehouse View. This should open it up here. Let me change this to the T. There we go. I know it's teeny weeny for you to see, but it makes it easier for me and time to go get a 4K monitor. Sorry, I mean, they're cheap. And if you say you're too old to see 4K, get readers. I use them, or in your 4K, you can increase the size of the fonts, and you can make it look like a 1080p. It'll make my videos look much better, I assure you. If you look at the strength in the market, TLT, VIX, leading is never good for the bulls. Interestingly, biotech and semiconductors were next. What's on the bottom? Mid caps, gold miners, small caps, NYSE, Dow Jones, Russell 2000. In the middle are the larger caps. So let's take a look. And this is looking at the strength in the markets on Monday, excuse me, on Friday rather. Um, Highest contributor, some contributor also from Monday, the 5 days, and a little bit from a longer time frame of closer to 3 weeks. But this is mostly a ranking by 1 day performance. And I'm just setting this up, changed a few things when I did those videos yesterday. If you are a person indicator subscriber, you should have received an email from me last night with them attached. If you did not get those videos, you know how to find me. All right, so I added something here. Let me just show you what I added. I wanted to look at when the 52-week high was and how far down are we from the 52-week high. So how I did that was an add create view, edit view. I already have a warehouse here filter that's got these things in it. And I just found these over here, put them in. These are fundamental or technical fields that we can use for creating a filter. And I stuck it in there so I could see on this analysis. So yes, we had a bingo, which is the baby out with the bathwater, hard sell-off. We're down 12.9% since the 19th. That's 10 days ago, minus a weekend. That's 8 trading days. Yep, that's pretty awful. Is there anything bullish on this? Yeah, the fact that we hit off the bottom here, which we already talked about, might be an important line of the sand. And we have a bottoming tail. We closed near the highs of the days. That's all awesome. It's great. I don't know if I believe that the market's done going down, but it was a good end on Friday. So now I'm going to do this. So where are we going to go? All right. I've got to believe that we're in a scenario now where I'm going to have Some resistance there. I'm going to have resistance here. Got a small gap to fill here, and that's prior chandelier. So considering that, the bull case is V bottom, and we're off to new highs. God bless you. I hope you're right, but I would put that likelihood to be extremely low. The bear case, we break right through, and we go on to new lows. Hey, we're just below the 200-day moving average. Markets have a tendency to sometimes correct even more. Certainly possible. What do I think is most likely? I think most likely is that we're going to probably muddle around here for a while, maybe retest before we break up, and we could have some problems getting through these areas, and then maybe break out or break down. I think the better part of valor is not that we're going to the moon or to hell, but that we're probably going to consolidate here. I don't know what's going to happen. I'm prepared in my mind for each of those scenarios, and I'll adjust based upon that. If I go from this S&P 500s, I look at the Dow Jones Industrial Average, it's down 14.1%, similar candle pattern, and a bingo rather, which is a baby out with the bathwater. If I look at the NASDAQ composite, knifed through its 200 days moving average, which is a pretty deep, but then it moved back up. Above it, closed bullish candle, bullish day, down 12.9%. We'll see if it's meaningful. Clearly, the relative strength on the NASDAQ is exceeding that on the S&P. You can see the person market catcher is still very high because you're comparing it against something that's really bad. And then on the Russell, which is off its recent highs by 14.2%, really has not even taken out the prior highs from 2018 or 19. Just for a quick aside, I got an interesting list of some coronavirus developments. A lot of new cases. Italian warning of tsunami effect on the hospital system. Confirmed cases rose to 1128 with 29 deaths. France 100, Spain 73 cases. Physics conference canceled a day before it's due to start. This is interesting. UK Health Secretary said it may need to isolate affected cities and bring doctors out of retirement to treat and diagnose patients. And two Chinese doctors fighting this actually succumbed to the illness. Those are scary things, and they're going to rattle the markets. If the market was open right now, that would be rattling it. Maybe that's more reason for the Fed to step in here, although this is about channel problems, not about interest rates. But when you see things like that, it's got to make you a little worried that the market's not done going down. And then the other thing is, from a physician perspective, I'm still going to take the point that flu is worse. That unless you are, this is what I told my employees, unless you're immunocompromised, your loved one's immunocompromised on anti-rejection meds, and Enbrel, Remicade, Humira for rheumatoid arthritis or other conditions, and a bone marrow transplant, have congenital immune deficiencies, or you're really old, 80 and above, you probably are not even going to know you have the illness because it's flu-like. But those groups I talked about, it can be pretty severe. So back to the story at hand. So the Russell's down 14.2%. So all the major indexes are down between 12 and 14%. Again, it's kind of interesting where the Russell stopped, right where the lows were last year. All right, sorry for that. All right, let's look at a few other things here. Dollar. So here, dollar's come off its high. It's down. It's really 2.4% below where it was in October. It's been very sideways, isolating around a very narrow range, but pulling back into its moving average support on the daily. If we look at the VIX, you can see the VIX certainly giving evidence that it's potentially run its course. It'd be nice, wouldn't this be perfect? The Fed will come in, will ease. Sentiment's better because Sanders did not win in South Carolina. The VIX already gave a signal on Friday. We're at support, and we get a massive bounce in the market. It could happen. Still going to worry about resistance on the way up. What else might we look at? We could look at gold. Gold got hit hard on Friday. Silver got hit hard on Friday, harder than gold, gapping down. And what really got hit hard on Friday, despite a weak dollar, was gold miners look like silver. Interesting market. Now, usually at this time, I do my top-down review. Well, I'll show you right away that if I go over and look at industry groups, and look at 2-day up, there's 4 of them. Now, somebody had a question about this, so let me just look at this. I haven't looked at this thing in so long. The filter is looking at last close, volume, and force index is greater than 0. So anything whose force is greater than 0, using stocks with that price and volume, will make it in. Now, there's a combo ranker. Let's take a look at that. And let's take a look at what I'm using here. There's no time limitation. So with this one, the only thing that we're looking at are positive 2-day force, and only 5 things had it. Medical equipment, only one's above their average. And if we look at this one, what do we see? We see that Alpha Pro Tech and other things and all the things that have these massive runs because of craziness in the market. A stock that was worth $3 becomes worth 46 in one day. Is that not a shorting opportunity? Well, of course, it's dropped in one day, it dropped 46% from its highs. Would I be buying this? Not on my life would I be buying that. That's the only one that made the list. I'm going to go back one. Biotech, you want to see more that look like that? I actually own one of them, but I owned it before this, Novavax. It's popped, but it was already moving before coronavirus was a problem because it had some positive clinical trials in the cancer world. So Novavax looks interesting to me here. This chart here looks a lot different, but this is another one. That is rallying because of coronavirus. Don't know anything about Trillium Therapeutics. I'm interested. I love the pattern because it did its crazy run, it pulled back, and now it's going again. So this one I might want to know more info from the web. Go to FinViz. So I'm gonna make this so you can even see it. Okay, so this is an immuno-oncology play. Update on cancer treatment programs. All right, so that's kind of something that may be interesting because it's not a one and done story, but I love the pullback flag breakout. 60% of the flagpole or more I'd expect to be added on from here. So this might be something interesting to look at, and you'll see it's on my buy watch. Sangamo, Regeneron, they had some good news. This is a big company, eye cancer and other space, expensive stock. Probably not going to play that one. I went through and I liked CRISPR as well. That's the next one on the list. And why did I like CRISPR? I like CRISPR because this is the pattern of the week, guys. Stocks that were in great bull runs have sold off, pulled back to support. And I got a new buy signal, a pocket pivot, a kahuna in a squeeze, and a green candle low. Is it the optimal pattern known to man? No. Oh, yeah, by the way, I've got bullish conversion on the person market catcher. So that one will make my list as well. Oil exploration and production, oil's at remarkable lows. Why are these going up? Especially if the world is tightening, maybe, or the world is easing its economics because of coronavirus. Perhaps there's belief that OPEC's going to tighten supply. You're buying off the bottom here. You notice there's not a buy signal here. You've got PMC, bullish convergence. You've got a kahuna. This is EOG Resources. EQT looked better because it's got at least a double bottom here. It's pulled back, went sideways for a couple of weeks, has a buy signal, two kahunas in a row, mobile breakup from a squeeze, and it's got major bullish convergence on the person market catcher. I like this one, and I may go nibble on this one. I think John liked it a week ago. Cimarex looks like EOG. It's got a bullish engulfing pattern there. Um, these stocks are majorly hit. Why are they making this list? Because force, 2-day force is a short-term move, and it looks at price today minus yesterday times volume, and these guys had big price moves. This was up $5.47. So you had a buy signal actually come in on Concho the day before. You had a bullish engulfing pattern, or almost bullish engulfing pattern on Friday with a kahuna, and you got bullish convergence. So maybe there's something to play in the energy patch. E-commerce discretionary, oops, gotta highlight that. Right click, change index group. Alibaba, I have some of this. We'll see if I end up getting out of it alive. Alibaba's pulled back. It's sort of in a little area of congestion here. Look at the bullish convergence on the PMC, and it was getting a lot of talk on the airplays. It's down 10% from its highs. Hgsi had great earnings. It had a nice pop here above its 200-day moving average. Farfetch, I had owned it. I sold it going into earnings, which turned out to be okay. I may have to look about getting back in. It's going to had a gap up on Friday with a kahuna after good earnings. I don't know much about Pindaloo, but maybe I should. A pullback much less than what we've seen. Sitting right now on its 17-day moving average, it's in a squeeze. Had a recent kahuna, and it's got a bullish convergence on the person market catcher, which is becoming a very important part now that I have it in HGSI of my analysis. If we look here, LA Toincore, here's our earnings per share growth, multiple is half. Now, do you want to buy something that's all the way down to the 200? It's still expensive. It's probably an interesting thing to look at. It's got a new person buy signal. Yeah, maybe on the PMC. I don't think so. Um, I passed on that one, but I did like some of them. Lamb Research still got positive PMC despite the pullback. Also a very expensive stock. I'm in a materials, and it pulled back significantly. It's got bullish convergence, had a green candle low. I don't have much of it, but that's one that I'm in. And then this one looks interesting, not Taiwan, Amacor Technology. Bullish convergence, but it's pulled back a lot. Maybe something's happening here, but it's really hard for me to look at these and get all excited. Why are these on the list? Because they had positive days, big moves here and there. You need a positive price change to make force. Now, if I look at the 5-day up, there are only, I don't want that, I want industry groups. Only 3 industry groups were up over 5 days. So we are really in a tough period of time where The long-term bongos are negative on most industry groups. 2-day down, just a couple. Why? Because everybody's been down much longer than the last 2 days. If I look at 5-day down, you can see I have 88. And I think that the way that the program is working, it's picking up things that are new, but I know somebody had a question about why do things fall off of this? Why aren't there 100% of the groups? I don't know. I've been using this so long, I'll have to go back and try and look deeper into how this is set up. But I can tell you when I see 88 groups are 5 days to the short side and only 2 or 3 are to the long side, it just tells you the market's been weak for at least the last 5 to 7 days. Now, I always like to show you my buy watch, but we're going to go a little longer today, I'm afraid. I actually found things that were interesting and I might start nibbling if we get a rebound, but I'm going to nibble with a tight leash. So these are the ones that made my buy watch list. Many of them, like Trillium and Hgsi, you've already seen. Let's just look at force up to rank them. I don't want to do that because I lose some of them. So we're going to go to, we looked at Trillium. Let me pick. We looked at Trillium, so we looked at CRISPR. We looked at a number of these. I hate to go through these because I don't want you to think I'm bullish and I'm buying everything. There's a number of biotech and specialty pharma. Still, the things that are involved in coronavirus are interesting, and there's a lot of these things at interesting buying points, things that have pulled back, things that have been big runners, quality companies. RealPage is a application software. I thought it had an interesting pattern. Pullback, clear bullish convergence, stock that was pulling back. Pocket pivot, Kahuna, person buy came in, mobile breakup from a squeeze and Bible gap up. Do your homework, make sure it hasn't run too far, but I thought RealPage looked very interesting. I'm going to go through the chart super fast. So this is RealPage. For whatever reason, why did that one pop up in this list? Oh, never mind. I'm going by industry group. Here's RealPage. Now we're getting to the biotechs. BioMarin, minimal pullback, clear market leader. Look how strong the Parks and Market Catcher stayed during this period of time. It's pulled back to the 50-day moving average. It'd be nice to see a Kahuna, pocket pivot or something. Great earnings per share growth. This is a good company. Minimally down, 6% hit thus far. Chemocentrics, they had popped on data, had a run up. You can pull it back to the 50. We call that free parking. In great stocks, sometimes it's good to look at buying them when they pull back to free parking. CRISPR, I mentioned. IntelliTherapeutics, why did I like this? I liked it because you got bullish convergence, you got a pocket pivot and a Kahuna. It's not my favorite. It's down big, 30%. I did like this one more. Here's you see on the weekly, a big uptrend and a pullback, orderly pullback. You had a person buy signal, mobile breakup from a squeeze, pocket pivot, Kahuna, and bullish convergence. Cario Pharma, earnings are not till May. Trillium we looked at, Alibaba we looked at, Etsy I looked at, VIPs. This is another, I believe, this is online, mostly Chinese, Asian e-commerce play. I liked it because of the fundamental earnings growth. I didn't necessarily like where it's at, although I did notice it's got some bullish convergence. I need more stuff like a buy signal to come in from Person or a pocket pivot Kahuna. K12 Learn, horrible looking stock. Why would I even put it there? It's a good question. It was the volume, it was the Kahuna, and maybe it's a play on the Chinese turnaround. Annixter, this is a semiconductor, a technology stock. I don't know if it's a buyout. Maybe it's a buyout and I should not have it there. Let's check real quick. All right, it's a purchase, so that's got to come off my list. Never mind. Annixter International. Concho Resources was one of the energy plays that was bouncing. Diamondback, same story, bullish convergence. Be nice to see a buy signal. Just these are watch list. I'm not buying them. EQT look more ready to go with the buy signal. The two Kahunas. Don't know anything about Natura. Sideways move. Now we've got pocket pivots, Kahunas, bullish convergence, and a new person buy signal. I like that one. Box. Um, it was the bullish convergence and the number of bullish signals. This is a bottom fishing energy play. Forget it. Alteryx is one I owned. I sold. Do I want to buy it back? And that's an important thing that I like to do. I buy back things after I sell them when they make sense. Probably not going to buy it here. It had a person buy signal come in. I probably need more. It's got a lot of resistance overhead. If it breaks above that 200, I might consider it. These are all sitting on a buy list. GDS Holdings, considering the market, it's down only 7%, pull back into the 50, strong person market catcher despite the pullback. That looks interesting. Unisys, strong market catcher despite a pullback. AbbVie, a drug company that I love to own. I'm out of it right now. I might want to get back in. Had a reversal candle on Friday, pays a 5% dividend. Luminex is a little bit too low volume, but I put it on here because I thought the chart was interesting. Sideways move, mobile breakout from a squeeze, person buy came in on Thursday, pocket pivots, Kahuna, and the PMC lifting off. I just can't buy things typically that have 326,000 average shares traded, but something to look at. Now we're getting into marine shipping. You're going to see a pattern here that why would marine shipping be going positive? Now look down here, you could see for this index, even though it was underwater, 65% were in sells. On Friday, I had 10 buys and 1 sale. Big sell-off with the coronavirus. It's bouncing here with a person buy signal, bullish convergence, a kahuna, and a squeeze. This is DHT, 8.5% dividend. Here is Euronav, same pattern, bouncing with a person buy signal, bullish convergence on the PMC. No dividend. Frontline, 1.2% dividend, same pattern, bouncing here. Scorpio, I like even more. Bouncing, person buy signal, great PMC, bullish convergence, pays a 2.0. Actually, that's not, one of them pays like 12. Here is TK Tankers, same story, bouncing off the 200, multiple kahunas. That's typically a very bullish signal. And then Multiplex, this was another energy play. This is a midstream. Why would I have this here? I only have it here because it's got bullish convergence and it pays a 13.3% dividend. But I point out if you're down 41% from the high, it takes a long time for that dividend to make up your losses. PennyMac Financial Services, I think I was mostly intrigued by its stability through this. Enphase, a good name, big move, renewable energy, has pulled back some. I might be interested in finding a time to get into that, looking for bullish signals coming in. TPI is another renewable, also in a similar pattern. Clearway Energy, renewable in a similar pattern. And then a couple of semiconductor manufacturers, KLA Tencor, not a lot of bullish convergence, but a buy signal on the 200. Acadia Pharmaceuticals, sideways move. You had a buy signal. Kahuna, bullish convergence on the PMC. Akiba Pharmaceuticals, pull back into support. Would look for a buy signal of some type before I get excited. Alkermes, this is a beat up biotech going nowhere that all of a sudden has got extremely bullish convergence. A PMC that's in the buy, a couple of kahunas when it took off. If it can break above the 200, it might be interesting to see where it goes. Collegium Pharma, another cheap pharma going sideways, but with bullish convergence, pocket pivots, kahunas, and a new person buy signal. Global Blood Therapeutics, this is when they got an approval. They broke out. They've come back to the 200-day moving average. Bullish convergence, just putting it on my watch list, might be something I might want to get back into. Neurocrine Biosciences, they do have products on the market. They've gotten clobbered. I just noticed how bad they were clobbered and how good their PMC looks. I need buy signals. It goes on a buy watch list. And Radius Health has got my buy signals. Two kahunas in a row, mobile breakout from a squeeze, beautiful person market catcher, bullish convergence. I've been wrong on this stock before. It's been a tough stock, but it's given me a lot of reasons here to maybe give it some love. Cincinnati Bell, I don't know anything about this company except what will pull back into support, a person buy signal, mobile breakout, pocket pivot, and kahuna. PMC market catcher is not helping me there. No dividend. And that was my list. Are these perfect stocks? No. A lot easier to find stocks that might be potentially actionable at some point this week um, compared to last week. Another thing I want to point out is I just don't buy those. What I do with those, you've all seen this before, but you never know when somebody new is joining. Excuse me, that's not coronavirus, allergies. This is that. I stick these into my watch list and I look for signals to be coming in during the market. So I have my stocks I own, buy watch list, and I have a number of things, including cigars, Q tools, some of my indicators that I like, Morales and Catcher, Bob Gapa's pocket pivots, what is the next earnings, and then John's signals. There's a whole number of them. So I do that real time. I also can do that to some extent in Market Watch. I guess that one's frozen. That was probably not going to. I don't know why that's not. Let me see if I can get that. Apparently, I need to do some computer work. That .NET issue is tied to Thinkorswim. I'll just see if it's doing that on any of my other machines. Maybe I just need to do a Windows update. Just want to throw out here that I can do the same thing. So I haven't done this yet, but I will take my buy watch list for this week. I'll import it in here. So these are the same stocks we were just talking about, and I can monitor them during the market. The market relativity, this is a proprietary buy sell signal. You can see they're all in a buy, no sells. That's kind of nice. I can look for those that have kahunas that'll pop up during the day. I do have HCDs and LCDs. That's proprietary. I can't share it. Pocket pivots, viable gap ups if there are any. And then stuff from Dr. K, his daily Laguerre, RSI, and stochastics, but more important, his market relativity telling me that which stocks have great seasonality right here. It requires, I think, at least 8 years, 8 or 12 years to make it here, an 8% move. I got a couple that have some good seasonality during this time of year as well. So I will monitor those during the day. So I just want to go back and a couple of things. I had mixed emotions about doing this today with the death of George. I thought it made sense to call out how great he was, how much he helped me. He did. I wish the family and him best, his family best. I wish him safe journeys and travels wherever God may take him. Certainly going north. He's not going south, and he'll be missed. I guess I just want to do one last thing. What I just showed you is top-down analysis. HGSI is also incredibly good for a bottoms up approach or from a scanning approach. So what I also do to supplement my buy list is I just go up to all securities, warehouse view, and why do you want to get the person stuff? I don't make a penny on it. I've been very clear because you can go into if you're feeling bullish. So I changed this for one of the person purchasers. I wanted to show how to do it. All the stocks who have either outperforming or improving, PMC improving or outperforming. So these have buy signals and improving person market catcher. So here's alarm. I could have liked this one. Um, been beaten up. Person market catcher's got bullish convergence. A kahuna and a person buy signal and a mobile breakout from a squeeze. I could look at buys near support. A number of stocks fit that criteria. Diamondback offshore, that's on the support there. And how do I know that's near support? I could actually flip it to a different view where it's sitting right on support. I could look at daily buy with a weekly buy. So you have to have hit a weekly buy, and let's put up rail page. Daily buy and in a weekly buy. Okay. I can filter these so many different ways. How about high close doji weekly and a PPS daily buy within the last 2 days? There's some really nice stocks in this list. And again, I keep going back to real page, high close doji. So I like HGSI not just from the industry group, not just from a bottoms up or top down, but I really love the scanning. And so one of the things I shared with the purchasers, and I can't share with everybody because you don't have all the indicators, is I started building in to some of my historical views on the pullbacks and uptrends. So let's just look at uptrend near free parking, and let's look at those that have a squeeze. There were 68 uptrends in free parkings that had a squeeze. And now let's throw into that list, add Kahuna and a PBS buy. Those are too tight because none of those are things that you want to be buying. Well, I could look at various combinations. Mobile breakout squeeze and a Kahuna. These are all bond things and acquisition companies. I don't know about Beta Auto. Kind of looks like it's being acquired, so I don't know that. Zio Group International. I don't know if that's an acquisition or not. It's kind of flat there, so it probably is. All right, nothing popped up there. Just not every day you're going to get good things. 2% of free parking, mobile breakout from squeeze. Raw pharmaceuticals, that's a buyout. So sometimes I'm going to find them with that scan, sometimes I won't. I have uptrends near the 20-day SMA, same scans with a squeeze here. A lot more of those. I didn't filter out for bonds and bond funds, and you see a lot of those are here. DocuSign. So it should be in an uptrend and be above its 15 or 20 day. That's clearly an uptrend. It's pulled back to the 20, and now it's got a buy signal. Let's see, what do I require? Just when it is, just has to be in a squeeze. Let me go back to my charts. Yeah, it's got a squeeze. Now, can I take some of those and add mobile breakout, squeeze, Kahuna, and a PBS buy? ChangeU.com. Looks like an acquisition, so I'm not going to go with it. Mobile breakout, squeeze, Kahuna. A lot of things here. Again, this one's not Kodiak Science. I've been looking at this one. Pull back to support and mobile breakout from a squeeze in Kahuna. So I do a lot of scans. I incorporate all my favorite momentum indicators. I do like the squeeze, but I love the fact I can now build in John Person stuff as well. Have a great week, everybody. May George rest in peace. And try and do this next week. But I'll be at the Traders Expo, so I may pass. If you're going to be in New York, drop me a line.